Okay, I'm Elena Bonanni, partner of ET.Group, the organization promoting Salone SRI. I'm very pleased to welcome here. We are at the 9th edition, and I will discuss with you in this session about investment, in sustainable investment and new compliance, new legislation and emerging trends. I'm very pleased to have Hortense Bioy, Head of Sustainable Investing Research, Morningstar Sustainalytics, with us. Thank you, Hortense. And also with us for the discussion, Nathalie Rebondi, Head of Sustainable for Europe, Schroders, and Anna Stagnoli, ESG and Strategic Activism, Eurozone. Thank you all for being here. Okay, let's start our discussion with a brief introduction, by Hortense Bioy. Hortense, I leave you this. Okay, you can see also there your slides as you prefer.
So, does this work? Yeah, brilliant. Hi, good morning, everyone. So I'm going to start with your favorite topic, which is regulation. And I'm going to talk about, if the clicker works. It's not working.
Let me check. Okay.
I'm going to talk about
for the help for the technical stuff to going.
Or maybe let's no. Back. Okay.
Okay, let me check.
The
I need to go there and check. Thank you.
Anti-greenwashing rules.
No, vado io. Okay.
That are going to impact the ESG fund market, and with a focus on Europe, of course.
La prima deve andare, è solo l'ultima che la mettete alla fine.
Ah, l'ultima slide?
Sì.
Ok, se tu glielo dici di mettere la slide, lui te la mette.
Okay. Io la metto questa adesso. Questa che avevate completa, quella che avevate.
Okay. Brilliant.
Sì, ma non
Here we go. Okay. Thank you very much. So, as I said, I'm going to talk about a few anti-greenwashing rules that are going to impact the ESG fund landscape, and I'm going to focus on Europe. But first of all, I wanted to please, there are seats in the front.
You can sit in the first line if you want. They are available.
But first, I wanted to show you a global view of the ESG fund market, because as you can see, there has been a significant growth in assets in ESG fund globally. And as I'm sure you know, this significant growth has been driven by not only investor interest in sustainability issues, climate change in particular, but also by product innovation and regulation, especially in Europe. So we are now at $3.3 trillion of assets as of September. At this point, I'd like to clarify how we define ESG fund at Morningstar, because it's not based on any regulatory framework. So here you have captured a universe of open-end funds and ETFs for which ESG factors play a central role in the strategy. So we do not include funds that just do ESG integration. We do not include funds also that just apply minimal screening. And we've also excluded money market funds, fund of funds, and feeder funds. Now, if you turn to another definition of ESG funds, so if you turn to SFDR Article 8 and 9, you see a similar picture. Since 2021, we've seen an increase in assets, reaching 6 trillion euros at the end of September. And now what we're saying is that 60% of assets in Europe, so in the EU, are invested in funds that claim some sort of ESG characteristics. As you know, these ESG characteristics vary a lot, especially for funds that are classified as Article 8, which has been a particularly challenging category to navigate for investors. Now, while assets are up, inflows are down. We've seen declining inflows since the peak in 2021. So we've seen declining inflows since the war in Ukraine, early 2022. And when you turn to SFDR, there also we're seeing the same trend, although in the last quarter, we've seen record inflows into Article 8, record inflows since the end of 2021. But those record inflows into Article 8 were outpaced significantly by inflows into Article 6, which are funds that do not promote any ESG characteristics. And also Article 9 funds are in outflows for the fourth quarter in a row. So what's going on? I'm pretty aware that I'm not painting a very positive picture. So what's going on there? Why are we seeing lower inflows? Well, there are a combination of factors that can explain these lower inflows. And I say combination, I would really insist on the fact that there is no single factor that can explain these lower inflows, but a few of them, including performance. Performance hasn't been good since early 2022, the war in Ukraine. You can see here some very popular Morningstar category. We compare ESG fund returns to non-ESG fund returns, and we see quite a lot of red since 2022, which has been the worst year so far, when traditional energy stocks were outperforming significantly, while we saw a crash of technology stocks. As we know, ESG funds tend to be, not all of them, but there's a typical outweight in technology stocks and underweight in traditional energy stocks, which explains this underperformance. Performance was more mixed in 2023 and 2024. Of course, as you know, the macroeconomic environment hasn't been very good to renewable energy stocks, which have seen terrible returns in the last 4 years because of high interest rate mainly, but not only. So ESG performance is one factor. Another factor is greenwashing concerns. That has seriously contributed to reduced investor confidence in those funds, as we've seen increased skepticism about the genuine sustainability credentials of some funds. Regulation is also another factor. So I said that regulation was a favorable factor, something that has kind of supported the growth of assets in ESG funds. But at the same time, in the last few years, we've seen some confusion led by uncertainties around the definition of Article 8 and 9 funds in particular. So a lack of clarity has led to confusion, and that hasn't really helped the market. And another factor is the anti-ESG sentiment coming from the US that we're seeing growing in Europe. So against this backdrop, and to address the criticism about regulation, the European Commission decided to review SFDR, and they launched a consultation late last year. What came out of that consultation is that SFDR needs to go beyond just simple disclosure and needs to combat greenwashing. And in particular, by creating a category system that will facilitate investors' understanding of the products that are available to them. At the same time, ESMA introduced some guidelines for funds that use ESG and sustainability-related terms in the name. They've introduced minimum standards. So they've created 3 broad group of terms, which you can see on screen. And for each of those groups, ESMA has introduced a minimum criteria. Now, the most stringent criteria are really for those funds that use any of the terms you see on the left. So environmental, sustainable, climate impact, ESG, green, and SRI. These funds will have to be fossil fuel free. Now, the funds that do not want to adjust to any of these criteria will have to remove the ESG related term from the names. And we expect, of course, a lot of funds, I'm going to talk about this in a moment, but to drop ESG key terms from their names, and some of them will decide to become transition funds because you have to apply less stringent criteria for this type of funds. And you see some additional requirements at the bottom for funds that use the term sustainable, impact, and transition. Now, here clearly, we are going beyond disclosure, and we're really moving into portfolio construction. And we've done a study. We did a study a few months ago, and we find that at least 4,300 funds will fall in the scope of these ESMA guidelines, which come into effect from May next year. New funds will already have to apply these rules. Existing funds have until May to decide what to do. That's 4,300 funds that have ESG or sustainability-related word in their name. And out of those 4,300 funds, we've identified 1,600 equity funds that hold at least one stock that are in breach of the exclusion rules that I mentioned earlier. So the impact is going to be significant. We really expect a complete reshuffle of the ESG fund market in the EU. And that will, of course, impact a lot of Article 8 funds, but it will also disproportionately impact Article 9 funds, because a lot of them are actually not fossil fuel free. They invest, they're thematic funds, they tend to invest in renewable energy companies. Some of them still have a legacy fossil fuel business. These rules also will likely disproportionately impact passive funds. A lot of passive funds, as we know, use the term ESG or sustainable in the name. We already know that index providers are taking out the names out of their index so that the funds can align and drop the terms. And more recently, well, the ESAs, so the European supervisory authorities, which include ESMA, also came out with some recommendations, and they say, okay, we really need to simplify here. SFDR is way too complex, too complicated. So let's simplify, and why don't we create just two product categories? One called sustainable, the other one called transition, because we need to transition the economy. That will help really educate investors about the type of strategies they have available, and they need to and that needs money to fall into. One point I want to make here is that sustainable funds will also use more the EU taxonomy as a reference point to assess sustainability in investments. Moving very quickly to what's going on in the UK, there's already an anti-greenwashing rule that is in effect in the UK since May. They have also introduced labels, sustainability labels, which haven't been very successful so far. So since July, asset managers have the possibility to opt for a label, but so far we know that only 10 funds out of 400 funds in the UK that have ESG-related terms in their name have had their label approved. The FCA, the regulator in the UK, has set the bar very high, and the approval what is it called? Process, sorry. The approval process has been slower than anticipated. Now, there are 100 applications so far. It's still below our prediction earlier this year that there could be 300 labels in the UK within a year. There's a lot of doubt about the demand from investors for label. We expect the market of labeled funds in the UK to remain small, and the market of unlabeled funds to be bigger. And here are just a few examples of funds that have already changed names in the UK, and also asset managers that have said they will also apply the same rule outside of the UK, so dropping the word sustainable or sustainability from the name to replace it by potentially vague terms like capital stewards, which I think limit the visibility of these funds. Or some of them swapped sustainable for ESG. So we expect an acceleration in the next 5 to 6 months until May next year. We expect an acceleration of rebranding activity in Europe. And of course, the names or the words that will be the most impacted are ESG and sustainable. And I'll finish on this slide. This is just a summary of what we can predict the ESG fund landscape could look like in Europe and in the UK. There could actually be 3 categories of product in the EU. There is a potential third category called ESG mixed for all the other ESG products that do not meet the criteria for sustainable or transition. This category of fund will still need to have some minimum standards. And also what the ESAs are proposing is that there is like a baseline of ESG disclosure for all investment products. So they're thinking we can scrap Article 8 and 9, require the same disclosure for everyone with enhanced disclosure for these ESG products. And in the UK, no ESG disclosure for funds that do not have any ESG characteristics. Only those that have ESG characteristics, whether they're labeled or not, will have to produce some ESG disclosure. I'm going to leave it here. Thank you very much.
Thank you, Hortense. It was very clear presentation, and you made some interesting points. Also, you mentioned transition, which is the main topic of our Salone SRI, and the needs for categorization of this kind of asset class to let the investor focus on the transition and on the asset that are now brown and they're going to be green. So let's start our discussion. I would start with Nathalie Schroeders. And how do you explain this declining of ESG flows?
Yes, so hopefully there is a slide that can be put on the screen.
You can advance.
Yes. So this slide just shows the volume of the news flow regarding sustainability, taking into account also the sentiment. And this is to show that obviously we've seen some form of a hype on sustainability in the previous years, which has really kind of slowed down. But what we want to show here is that the trend is upward, clearly. And even though there are bumps on the road, it remains firmly on the rise. And the reason behind that is that the reason why we all take into account sustainability and the reason why that matters is because it's creating structural changes in businesses, in markets, and in the economy. Climate change, the loss of natural capital, and so on. This is really disruptive forces. So taking into account sustainability is here to stay, is going to continue to remain in place and continue to play a very important role. However, from I think the decline in flows that we've seen in funds and that we do not see in the asset owner space, I have to say, is also a sign of a market that is maturing, which I think is a very good sign, because, you know, in those years where everybody's saying, I've been sustainable forever, and I will do so forever, from kind of being a bit more nuanced, a bit more mature, a bit kind of what do we take into account? Why? What is most material to a company? What is most material to a sovereign as well? Because sustainability in sovereigns is also very important. Is getting a bit more nuanced, and I think it's a very good sign. So from a flows perspective in funds, and I completely agree with your conclusions that clearly we've seen a downward trends. I think what has been affecting notably Article 9 funds in the fact that you had many strategies that were investing in more niche assets or kind of less diversified types of strategies because they were very focused on a theme. They have been suffering from a lot of volatility and underperformance. And therefore, we've seen in the wealth market, notably, less appetite for these kind of strategies and more appetite for strategies that do embed sustainability characteristics, but in a more inclusive way, and also with strategies that can, for example, decarbonize, but with less tracking error, you know, kind of being closer to markets. And we still see some kind of demand for that. And if we look at the broader space, not just Europe, but for example, Asia or in the US, you had in your first slide showing that Europe is the bulk of the sustainability markets. That's true. And it's true from investors, it's true from asset owners as well, because obviously the regulatory framework in Europe and in the various countries has really pushed everybody towards investing for sustainability. But in Asia, we also see kind of an upward trend. In North America and in the US, when there is this very big ESG backlash from a political perspective, and it's really an ideology to be against ESG, we also see, even in states like Texas, asset owners that do invest for sustainability because they do recognize the reality and the materiality of climate change disruption and in the future, nature loss disruption. So we really see this trend continuing going forward.
Thank you. And Anna reads on, okay. There is also your slide.
Yes,
I asked the technical staff to put it on because it's no, it's different. Okay, they are going to put it on. Don't
Okay.
worry.
Okay, we wait.
Okay, see, we
Okay.
wait for them. But
We
anyway,
wait? Yeah.
I will ask for this. We saw in the presentation, in the slides, that
Yeah.
this declining was supported also by general concern and greenwashing concerns. So is the CSRD going to play a role in getting this better?
Yes, thank you. Thank you for the question, and thank you for inviting us to discuss on this point and to bring our experience on this topic. Because the answer synthetically is yes, for sure, but not only the CSRD. For sure, we have to speak about the taxonomy and SFDR, as the colleague said before. I think that the most important thing that we have to take into account is that the data are the basis to fight the greenwashing, and the opposite phenomenon that is the green hashing. So to not fall both on greenwashing or hashing, I think that the data are the basis. And to have the data, the company has to disclose it to the market. The regulatory framework help the companies to have a higher level of disclosure, both at entity level and on the products, and it's the business of Eurozone in particular. But we are seeing that there are two area of improving relating to the availability of the data, and area also of challenges, because there is an area of challenge regarding the entity level, so the disclosure that refers to the company and the effort for the company that are subject to the CSRD. We know that until 2028 there will be 60,000 the companies that in Europe will be subject to CSRD, and we as subject to CSRD as part of the group Intesa San Paolo, we know that is a particular effort to find and to give the data, to find and to classify the data that the regulatory framework asks to us. But we find...
if I interrupt you, chiedo alla regia per favore di mettere la slide di Anna, che era l'ultima, perché I see that it's not on.
Okay.
Grazie.
And in this, we can also find a challenge, but also an opportunity, because it's helping also to us to better understand who we are in this moment, in this particular moment of great attention and great availability of the data and great need of the data from the market and also from the regulatory aspect. Then our experience, it's also referenced, it's also near to the financial product, for sure, because we saw the trends, and the availability of the data allow the investors operator as Eurozone to find the new strategies to offer and to structure some new products that can invest in transition more clearly in transition, and to have a higher amount of data, but also a higher quality of data to related to the companies in which we invest. So I think that it's a particular moment that can face challenge, but also opportunities to find, both at entity level and also from the financial products level. I don't know if we have the slide.
I'm sorry, I
No?
don't know if they're listening even to me. Okay.
Yeah, it's okay. I resume it, and I try to resume it in a few words.
I'm sorry, I'm
No problem.
to check to
No problem, no
I
problem.
don't know if there is somebody there. C'è qualcuno in regia che ci può mettere la slide aggiuntiva che avete, per cortesia?
No problem. It was about the cheating at the transcript of the listed equity, the listed companies on the S&P index, and tracked all the words referable to sustainability, diversity, inclusion, ESG, and the transcript of the CEO and the board member during the publicly speaking and all the statement that the listed company does since 2024 and starting from 2019. So it's nice to see that there is a area of high concentration of these words. I think more or less in the same area of the peak we see at the slide, in the slide now. And but the second chart that I would show you is that if we compare the fact that maybe now the declining of the use of these words is clear by the graph. The flows continue to be positive, in particular to those funds that speak about and that they invest in transition. So this is a positive way to interpret this trend.
Thank you, Anna. I'm sorry again for the slide. I don't know, they were already in the technical area, but anyway, I will check and I'm sorry. Nathalie, please, Hortense, feel free to step in whenever you believe. Nathalie, now legislation is now realizing that transition is an important piece of the puzzle. So, do you think that we are on the right path now with the possible revision of SFDR and also ESMA guidelines for fund naming?
Yeah, so I think the transition component was a bit absent from the regulatory framework in Europe when we had just SFDR, and it was something that really the whole industry and ourselves as well were advocating for, saying transition is critical. If you only invest in the most sustainable companies, or from a climate perspective, the ones that are already low carbon, it's a sort of paper decarbonization at the portfolio level, and then you don't get the real world outcome that you want to get to make sure that you can keep diversification in your investment portfolio. So it was really something very important, and the ESMA funding guidelines take this into account and recognize this by introducing this transition category. And in the UK, there is also the improver label. So that's a good thing. Then when we think about transition, the way we define it is that you have the companies that are transitioning themselves, but you also have the second pillar, which is the companies whose products and services allow the others to decarbonize. And that component of the solution piece is absent from the ESMA framework because they are focusing solely on companies that are transitioning themselves. So for example, if you have a fund that had transition in its name until now, but invest in solutions to enable the transition of the economy, you cannot stay in the transition bucket because the requirements of the investments in the portfolio having to have a clear and measurable path to transition, you cannot really meet that. And that's the case for us, for example. We have an Article 9 fund that invests in solutions that is going to change its name because of this regulation to go into the environmental category, for example, and apply the PAB exclusions, which kind of fit with the investment process. So it's kind of a bit tricky as well. And I think the good thing from the ESMA guidelines is that by creating categories, it creates a sort of a framework that is easier to understand. And I think about the end investor as well, for whom the MiFID test really doesn't resonate, is not aligned to Article 8 or Article 9. So if we end up with a review of SFDR with some clear categories, with clear KPIs and requirements that resonate with the end client, it's going to make our lives easier and the life of the end client easier. So that's a very good sign.
Thank you. Because what it makes me think is that also ESMA guidelines, they say these are fund naming guidelines, they are not categories, if I don't get it wrong. So there is,
but de facto
we need categories. Also with SFDR was just this disclosure indication, not categories, but then the market used as categories because we need categories to compare investments and to have some fixed points. So thank you. You see that the screen now is black because I hope that no, it's coming the same slide. I thought we could. Okay. Anna, I wanted to make you surprised with your slide for your second round, but I don't know if we can make it. So, please go on.
Maybe if I can add something. I mean, what's interesting at this point is, of course, I mentioned the ESAs, the opinion piece, but they haven't said how the product categories would interact with the ESMA fund naming guidelines. So it's a bit of a mystery to see how this is going to work out in the end. Some countries, including France, haven't yet translated, or they didn't want to, I don't know what the word is, approve, or I don't know what the legal term is, but they say, oh, we still need some clarity around the ESMA fund guidelines because this is not going to work for green bonds. So as you know, a lot of issuers of green bonds still have a fossil fuel legacy business, and they would not be able to indicate in their names that they invest in green bonds when actually the green bonds are really a product that has been created for transitioning companies, to help companies that today that are still brown, but they are investing in environmental projects that will help the company decarbonize or do other things that are related to the environment. So yeah, there's still a number of details that need to be ironed out, but I think the really important point is that we need simplification. And I think next year is really going to be a test year for Europe with all the pushback we're seeing against regulation, like we mentioned CSRD, but we know SFDR also is way too complex. The word of the day is simplification. How can we simplify the disclosure that is required from asset managers, but also from companies, and how can we simplify? Can we help really investors understand what they are investing in without being too prescriptive, and also be cognizant of the market we are, the state of the economy today, which is not sustainable. We need, and also maybe one last point. I think we need to make a distinction also between the agenda of the EU, which is really the primary objective of all these regulations are really to channel more money towards sustainable activities. This was always the primary channel. We need to make the continent a carbon neutral continent by 2040 or 45, I can't remember what it is. So we need to channel money towards sustainable companies, sustainable activities. That's the primary objective. The European Commission has deviated a little bit from this primary objective and moved into, we also need to combat greenwashing. So let's hope that the second objective now doesn't derail the primary objective, which is really to make the continent more sustainable.
And I think that there is also this challenge that there are a lot of details to be completed from the investor point of view and also from the company's point of view, and all this revisioning and pushing back, for example, the CSRD or discussion is not giving the right time to assimilate it. And now we are discussing something that it was 3 years ago, something very new and breaking, the normal rules, and now we are revising it and we are putting a lot of stratification. So this is a challenge, because also for companies that have to invest in tracking all their KPIs and performances, every now and then they have to be aware of something changing, and this is not helping. I go to Anna. Natalia, you wanted to add something to this? Okay, Anna, we made it. I don't know how we made it, so we can start from now.
Yes. This is what I was describing before, and if you see the path of the mention of ESG relating keywords, it's similar to the trend that we saw with the slide of Anathal. But this, as I was saying, doesn't impact the flows to sectoral investments, in particular on energy and energy sector. This is what, and I'm linking on what Natal and Hortense said, because I completely agree with the fact that we need simplification. We need to back to basic, to go to the origin of the necessity to have a sustainable framework to help our investors, because we know that our investors are completely committed, but they have to be guided in a certain way on this sustainability path. So I don't know if I can explain what are...
Yes, because we saw that in the slides, there was a very low uptake of new labels from us managers, and maybe there was this scenario of uncertainty about investor demands. So my question is, what do investors need?
Yeah, at first there is, I think, one big difference to make between retail investors and institutional investors. This is what we are seeing on our experience. Retail one need to be guided and to be informed on what the company is doing, and also the market what the market can offer to them in terms of sustainability and in terms of performance, financial, from the point of view of the financial performance, but both sustainability performance of the products that you offer. What we are seeing is that since 2021, so since the SFDR came into force, we had more or less the 41% of the funds that we were managing according to Article 8 and 9 characteristic of the SFDR. Now we reached, at the end of 2023, the 76% of the IUM managed in UCITS funds. This means that the customer needs to be guided and oriented in what the market is offering, and on the opposite needs. Different for the institutional clients, because in a certain way they are smart customer, and they need to be involved. And we are seeing also in these months we launched a new service for our institutional investors, to include them and to involve them in our sustainable pathway with the issuer we engage, and they are so happy to participate to this initiative. We launched a format that in Italian is engagement a porte aperte, and we try to involve them, to make them auditor, but involved in the question that we put to the issuer, and we saw that this kind of involvement helped them in growing up their sustainability profile and their sustainability challenge they have to face, respect their business involvement. So it's really nice to have this clear commitment, this vocal commitment, and we try to be a guide and guide the retail customer from one side, and to lead and bring to the sustainability profile more and more our institutional investor, and together with them improve the profile, the sustainability profile of the issuer in which we invest. That is one of the most important things that we have to keep in mind for sure. So together with the performance. So the label are for sure one of the most important things that could also guide. In Europe it's not so harmonized as in UK maybe, and we have to be aware and to work together to have a simple way to interpret the evolution on this.
Thank you. Natalia, you were...
Thank you. Okay. Yeah. Well, as we are a UK asset manager, we have a view also on the UK market. It's true that the number of labeled products is relatively low at the moment. We believe it's going to increase in the future. We are applying for a number of labels for a number of our funds. The discussion with the FCA have been quite long and quite very detailed, and kind of they went into a lot of nitty-gritty items. So I think that's why it's kind of been postponed and took longer than what was expected. But on our side, at least, we want to have labels for a number of products. And these are usually strategies that are also sold in a Lux format in Europe. So we want to make sure that we keep the integrity of the investment process, but then we adapt to the various regulatory frameworks in Europe and in the UK and in Asia, because, for example, the Lux funds are sold in Asia as well, and the regulation is not the same here. But what I want to say here is that what is the most critical to combat greenwashing is to make sure that the promise you've made to your investors at the launch of a fund remains true, and that all of it is based on the integrity of the investment process. Because then you can decide if the regulation changes or evolves, whether your products need to meet one category or another category. But as long as the investment process remains true, I think that's really the key thing. And in the future, from the ESMA funding guidelines perspective, on our side, our fund range is going to remain very stable. We're going to change a fund name from transition to environment because of this solution bit that is not covered by the ESMA guidelines, but we are a bit concerned that if there is a lot of funds that move away from sustainable or environment to transition to avoid the Paris and benchmark exclusions, this category might become all of a sudden very big, and then it can trigger more greenwashing concerns, and then really the devil is going to be into the details on how do you assess the transition plan of companies, how do you make sure these are credible, and then how you track progress over time. And it's not just about climate, it's also about nature, it's about, a lot of topics. So it's going to be a bit tricky, I think.
I would say it's also about social, but we are a little bit far away to tackle this big problem with solid KPI for social and. Natalia, you wanted, Hortense, you wanted to add something to close this session? I thank you very much for your explanation and your introduction. I thank you, our panelists, Natal and Anna, and again, Hortense, Morningstar Sustainalytics. Thank you very much.